Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online interview series. We want to talk today to John McConnell, the CEO of Victoria Gold. Hey, good morning to Canada. How are you doing, John?
Yeah, no, very well. Good morning to you from Vancouver.
Yeah, from Vancouver. Beautiful. Great. Yeah, first of all, before we start, I really have to congratulate you because you were the recipient of the AME 2021 EA Scholz Awards for leaders in mining. Well done, I would say.
Well, thank you. It's nice to be recognized by your peers for your efforts. And, it was a great celebration and we had a big group of our team there, and it's nice to be recognized for a job well done by the team.
Absolutely, and I think you guys did an exceptional job to really bring Victoria Gold here into production and now being the largest gold mine in the Yukon. Let's talk about your project 250 before we come to an update on the running quarter, because I think this is let's say your really next step for 2023.
Yeah, Project 250 is to go to 250,000 ounces per year in 2023. And it involves two things. One is to go from, currently we don't stack 11 weeks of the year, the coldest weeks. Mm-hmm. But now that we have essentially 3 winters behind us, we don't see it as an issue, and we've got a lot of material under leach, and it's holds a lot of heat. So originally the risk was you freeze part of the pad, but we're very confident now that won't happen. So we're going to go down to just not stacking 5 weeks of the year, and it's essentially that gives us 5 weeks for maintenance of the plant and overall. And then the second thing is, when we designed the plant, it was based on a lot of test work, but we didn't appreciate the amount of fines we would generate in blasting in the open pit. So we have a plan that we will put in a second screening plant between the secondary and the tertiary crushers, screen off those fines, and take them directly to the heap leach pad. And that will allow us about 15% more throughput through the crushing plant. So the combination of going to year-round stacking and screening off the fines will take us to 250,000 ounces per year.
Super. So would that mean with approximately the same equipment almost, you can do 250,000 instead of, let's say, 210,000 ounces?
Yeah, it's, we have to put in the screening plant, and that's going to cost around $20 million, but it's a very quick payback. And eventually we may need a couple more trucks. But we'll just include that as part of our sustaining capital. But, more throughput means you need more trucks. So, but very minor capital outlay to get up, increase throughput or increase production another 50,000 ounces.
And that means the 250,000 ounces you want to hold then, of course, through the life of mine.
Correct.
So that means you have like 2 one-time event investments, but you can produce the next, 10, 15, 20 years.
Yeah, well, and that's a good point. We do have Project 2040, which is extending the mine life another 10 years. And that's through mining Eagle to a deeper depth. So we're drilling that now. We'll have some news out here this week on some of the steps we've taken, but we still continue to drill Eagle off at depth and are very confident that we'll add at least another 10 years of mine life.
Super. To what extent do you see then the AISC dropping? Because there must be a drop into your costs, right, in the production. Finally.
Yeah, well, you would think so, but we'll get the all in down below $1,000 per ounce.
Mhm.
But as a result of COVID, we're also seeing a lot of cost increases, and we've budgeted about 15% increase because of inflation in 2022. I don't know what astronomical price you're paying for fuel in Europe right now, but certainly, the price per barrel of crude has doubled over the last 3 months. And, although we use hydroelectric power for the plant, we still, our trucks and loaders and shovels still use diesel. So,
yeah, I was 2 weeks ago in Geneva, and I was shocked because I paid 2 francs and 10 cents or raps for a liter petrol. I never did that before, honestly. That's really inflation, as you named it, right?
yeah.
Yeah, absolutely. No, so I can imagine, of course, that's also a big problem for you guys, or for overall the industry, of course. How is the quarter so far running? Are you satisfied?
Yeah, I mean, this is our maintenance time right now. So we shut down the plant mid-January, and we're restarting today. So, that was 5 weeks for the maintenance shutdown, and we completed all the work we wanted to get done on time and on budget. And, the biggest area was putting in a fixed conveyor up the side of the leach pad so that we're not as reliant on our grasshopper conveyors.
Okay, super. So no major hiccups, no big issues. All is okay.
Well, we're starting up today, and, it is mining. So I know, getting new equipment up and running, always there's a few headaches, but that's planned for, and we look forward to a high production rate in March.
Okay, super. So let's come a bit to the financial side. You have also amended your credit facilities, and you included the reduction of your interest rates. Can you comment a bit on that?
Yeah, I mean, we paid down 61 million in debt last year, so there's less risk to the banks. We've demonstrated another good year of operations. So we approached the banks, and they reduced the interest rate by another 0.5%. So, it doesn't sound like a lot, but the numbers we're talking about, it saves us roughly $1 million a year. So
nice amount of money, I would say.
Yeah,
definitely. Super. So, what is the, let's say, immediate plan? Restarting drilling, looking for new opportunities. Can you comment on that also, please?
Yeah, our most promising regional exploration target is an area called Raven. It's out to the east of Eagle. We've had a couple years of drilling there, but really, because of COVID, haven't had a good, strong season. We drilled roughly 8,000 meters there last year. And, it looks very promising. We'll have some results out in the next week or so. But we're already planning a $20 million program for this year. And we'll get started drilling in April. And we're going to set ourselves up so we can drill right through to the end of October. And the plan is to drill it off and have a resource reserve out by the end of this year, and then we'll move to a PEA in 2023.
So that would be then the next mine.
Well, it looks promising.
Love it. Okay. Super. Yeah. What are next immediate goals? Let's say for the next, by the end of this quarter. I mean, it's only like 4 weeks left, but what do you see until summer? What are the major things you want to have achieved?
Yeah, I mean, we'll get out our quarterly results early in April. We've got the first drill holes coming out of Raven from last summer here in the next couple of weeks. As well, this week we'll get out some information to the public on our deep drilling program at Eagle. So, those are the real catalysts coming up over the next few weeks and months.
Fantastic, John. Then we look forward to the catalyst, because I have a good feeling that we speak then quite soon.
All right.
Super. Thank you very much. All the best. Have a great day. And keep us posted, please, and talk soon to you.
Okay. Thanks, Jochen.
Thank you. Yeah, ladies and gentlemen, that was John McConnell, the CEO of Victoria Gold. And you heard it. Things are progressing well. The maintenance phase is done. They restarted today the mine. Things are looking great. They paid down last year $61 million in debt. Exploration restarts, $20 million budget this year. And also the project 250 is well underway. And lots of catalysts to come in the next weeks and months. So stay tuned. Really make sure you have some Victoria Gold in your portfolio. Thanks for watching us, and bye-bye from Switzerland.